Futures are on fire! The market's buzzing with anticipation and the early indicators are flashing green. We're seeing a surge in pre-market activity, hinting at a potentially explosive trading day ahead. Get ready to buckle up, because it looks like we're in for a wild ride. Here's the playbook. Booyah! We've got the strategies, the insights, and the tools you need to navigate this fiery market. This isn't just about luck, it's about having a solid plan and executing it flawlessly. Good morning, traders, investors, speculators. Welcome to the pre-market huddle. This is where we strategize, analyze, and prepare to seize the opportunities that the market presents. Forget hitting snooze. The early bird gets the worm, and in this case, the profits. Futures are surging this morning. What does it mean for your money and trades? We're talking real potential here, folks. This isn't just about numbers on a screen, it's about your financial future. Are you ready to capitalize on this momentum? This is the market's opening move, the first tell in a high-stakes game. Every tick, every blip, every data point is a piece of the puzzle. Can you read the market's intentions? Can you anticipate the next play? Pre-market futures are contracts, bets on where the S&P 500 and Nasdaq will open. They're a glimpse into the collective mindset of the market, a prediction of what's to come. When they're up, it signals optimism. When down, it signals caution. But remember, the market is a fickle beast. Don't let emotions cloud your judgment. Stay objective, stay disciplined, and stick to your plan. Understanding this sentiment is your secret weapon. It's the edge you need to outsmart the competition and come out on top. You want to be prepared, armed with knowledge and ready to execute. Hesitation can be costly in this game. Be decisive, be confident, and pull the trigger when the opportunity arises. So, why the surge today? It's a mix of economic data, corporate news, and global headlines. News from the Bank of England, blockbuster tech earnings, and fresh oil data are all in play. The market is a complex web of interconnected factors, and it's crucial to understand how these elements interact. Each is a clue to potential profits. It's like being a detective, piecing together the evidence to solve the mystery of the market. We'll break down what's moving the needle, so you're not trading blind. Knowledge is power, and in the market, it's the difference between success and failure. Forget the noise, we're here to find the signal in the static. Focus on what matters, filter out the distractions, and stay true to your strategy. The market is a battlefield. Pre-market analysis is your reconnaissance. It's your chance to scout the terrain, identify potential threats and opportunities, and formulate your battle plan. Grab your coffee, sharpen your pencils, and let's get ready to make some money. Ski-daddle. Let's dive in and make the most of this exciting day in the market. Remember to stay sharp, stay focused, and always be ready to adapt to changing conditions. The opportunities are out there waiting to be seized. All right, let's dive straight into the heart of the action and get to the scoreboard. We need to see who's leading the pack and who might be lagging behind in these early hours. It's crucial to understand the landscape before the market truly opens and the real fireworks begin. So let's break down the key indicators and see where the smart money is flowing. The S&P 500 futures are up 0.7%, a solid start to the day, indicating positive sentiment across a broad range of large-cap companies. This suggests investors are feeling optimistic about the overall economic outlook and are willing to put their capital to work. Broad market confidence. We're seeing a general sense of optimism permeating the market, which is always a good sign. It means investors are willing to take on more risk, driving prices higher and creating opportunities for gains. This isn't just a few stocks. It's not just a handful of companies carrying the weight. It's a team effort. We're seeing strength across multiple sectors, indicating a healthy and sustainable rally. This suggests that the positive sentiment is widespread and not just concentrated in a few isolated areas. Investors are bullish on America's top companies. They believe in the long-term growth potential and are willing to invest their capital to support that growth. This is a testament to the strength and resilience of the American economy. Now, let's take a closer look at the technology sector, which is often a leading indicator of market sentiment. Nasdaq 100 futures are up a whopping 1.2%. That's a significant jump, indicating strong demand for technology stocks. This sector is clearly leading the charge this morning. That's a risk-on signal. Investors are clearly willing to embrace higher growth, higher risk assets in pursuit of greater returns. Big names, Apple, Microsoft, Amazon, the tech giants that often dictate market direction, are having a fantastic morning. They're leading the charge and driving the overall market higher. The greed meter is ticking up. Investor appetite for risk is increasing, and they're becoming more willing to chase gains. Gold is down 0.4%. A slight dip, but significant in the context of the broader market. When stocks soar and investors are feeling confident about the market's prospects, investors move out of safety and into growth. They're willing to take on more risk in pursuit of higher returns. Money is flowing from gold into tech, a classic sign of risk appetite. Classic risk on, risk off. The age-old dynamic playing out in real time. Crude oil futures are up 1.5%, a notable increase suggesting positive expectations for economic activity. The market's betting on a strong global economy. Investors are anticipating increased demand for goods and services worldwide. Higher oil prices mean factories are humming and demand is robust. It's a sign of healthy industrial activity and economic expansion. So we've got strong equities, indicating a healthy appetite for risk and growth, strong oil, reflecting expectations of increased economic activity and demand, and weaker gold. Investors are shifting away from safe haven assets and embracing riskier opportunities. The pre-market message, the signals we're seeing before the official opening bell, it's game on. The stage is set for an exciting day of trading. Watch how these moves set the tone for the day. These early indicators can often foreshadow the overall market trend. Stay nimble, be prepared to adapt to changing market conditions. Opportunity is everywhere, but you need to be ready to seize it. Keep a close eye on these trends and be prepared to make informed decisions. Good luck out there. What's lighting the fuse under these futures? It's a perfect storm of news. Today, three massive stories dominate. The Bank of England's surprise rate cut, a monster tech earnings beat, and a bullish oil inventory report. The Bank of England's move is sending optimism across the Atlantic. Next, a semiconductor giant's blowout earnings are lifting the entire tech sector. Finally, U.S. crude oil inventories came in much lower than expected. Demand is outpacing supply. Each story is a critical piece of today's puzzle. Ignore them at your peril. These are your roadmaps for the trading day. We'll dig into each, so you know exactly what's moving your money. Stay sharp. These headlines are your edge. Let's break them down. The Bank of England just cut rates by a quarter point, unexpected and impactful. Why does it matter here? Global markets are connected. Lower UK rates push capital toward US markets, especially tech. It also hints that other central banks like the Fed might follow. This is a risk-on signal future profits become more valuable, especially for growth stocks. The move is fueling today's rally in S&P 500 and Nasdaq futures. Liquidity is flowing, and that's bullish for stocks. This isn't just a one-day story, it's a shift in the macro landscape. Don't fight the central banks. Let's talk big tech. Nvidia just obliterated earnings expectations. This isn't just about one company. Nvidia is the backbone of the AI revolution. Their blowout report signals massive demand from tech giants building out AI. It's a green light for the entire tech sector. Investors are piling in. The Nasdaq surge is thanks to this confidence in tech's future. This is real demand, real profits, and real momentum. Earnings are king, and today, Nvidia wears the crown. Booyah! Now, energy. U.S. crude oil inventories saw a surprise drawdown. Less supply, strong demand. Prices jump. WTI crude futures are up, signaling economic strength. Rising oil prices mean the economy is running hot. More shipping, more travel, more production. The energy sector is a big part of the S&P 500, so oil's rally lifts the whole market. Even if you don't own oil stocks, this matters to your portfolio. Today, energy is a tailwind for stocks, not just tech. The rally is broad-based, grounded in real economic activity. Don't ignore the oil pits. They're telling you the engine is running hot. Watch for continued strength. Let's get technical. Chart attack time. Key levels, S&P 500 futures set to open above 5,400. A new support zone. As long as we hold above 5,400, bulls are in control. Next target, 5,450. Nasdaq 100, blasting through 19,000. A major breakout. 19,000 is now support. Next stop, 19,200. Watch these numbers. They're your guideposts. If S&P 500 drops below 5,400, that's a red flag. If Nasdaq bounces off 19,000, that's confirmation of strength. These aren't magic, just where big money is clustered. Use them to manage risk and spot opportunity. Stay alert for intraday volatility. Let the charts guide your trades. All right, traders, let's dive straight into the heart of the action. The market is moving, and we need to be ready to capitalize on the opportunities it presents. I've got 3 compelling trades lined up for today, each designed to leverage current market conditions. These aren't just random picks, they're carefully considered strategies based on technical analysis and market sentiment. Strategy 1. Buy the dip in the Qs. We're looking at a potential pullback in the tech sector, presenting a classic buy the dip scenario. Wait for a pullback to 19,000 on Nasdaq futures. That's the level we're watching closely. This area represents a key support zone where buyers are likely to step in. If it holds and we see signs of a bounce, that's your entry. A confirmed hold at this level suggests renewed bullish momentum. Strategy 2. Go with the energy flow. The energy sector has been showing considerable strength, and we want to ride that wave. Play the XLE ETF. It's a broad-based way to gain exposure to the energy market. This ETF offers diversification across various energy companies. Energy stocks have a double tailwind, creating a potentially lucrative opportunity. From oil and the market rally. Rising oil prices and overall market optimism are fueling the sector's growth. Look to enter on any morning weakness. Early morning dips can provide excellent entry points for this trade. Strategy 3. Fade the safety trade. As market sentiment improves, safe haven assets like gold tend to lose their appeal. Consider a tactical short on gold, GLD ETF. We're betting on a continued decline in its price. Risk on means gold underperforms. When investors are willing to take on more risk, they typically move away from gold. If stocks keep rallying, gold could see more pressure. The inverse correlation between stocks and gold could intensify. These are ideas, not commandments. Always remember that these are just suggestions. Do your homework. Thorough research is crucial before making any trading decisions. Align your trades with the day's momentum. Trading with the prevailing trend can significantly increase your chances of success. Diversify. Don't just chase tech. A well-rounded portfolio is essential for managing risk. Manage your risk and stay nimble. Adapt to changing market conditions and protect your capital. The market's giving you setups. Take advantage. Don't let these opportunities pass you by. Opportunity knocks. Be ready to act. Hesitation can be costly in the fast-paced world of trading. Let's make it happen. Good luck and happy trading. That's your pre-market playbook for Monday, June 16th, 2025. We've covered the headlines, the key levels, and the trades. You're now armed with knowledge and a plan. Trading isn't about being right every time. It's about discipline and risk management. The market will test you. Trust your prep. Bulls are in charge. Look for ways to ride the momentum. Your edge is preparation. Use it. Embrace volatility. That's where opportunity lives. Want this energy every day? Smash that like, subscribe, and hit the bell. Thanks for tuning in. See you after the bell. Booyah.